For more on this, let's welcome in business and markets analyst and NewsMax contributor Seth Denson and accounting professor at Montclair State America's accountant Dan Geltrude. Gentlemen, welcome. So Seth, I'll start with you. I mean, the markets, they're being affected worldwide. In Russia, where the ruble has plunged to an all-time low and their market has dropped more than 40%. What do you think we're going to see as the markets open in just a few minutes?
I think you're going to continue to see a downward spiral today. I think most analysts are thinking that the day will probably close in the 1,000-point loss range. Again, I don't time the markets. I encourage people not to try to do that. I encourage people to stay the course, think about their time horizon. But, you know, as investors continue to wake up and start to see what's going to happen and think about this prolonged, and as that news comes out of what you just said, how much this is hitting the Russian market, and yet Vladimir Putin is still proceeding, that's going to be very concerning to investors, and I think there'll be a big sell-off today.
Yeah, Dan, Russian banks and oil companies are among the hardest hit in this volatile trading. This is expected at this point, though, right?
It really is. I mean, this is an initial reaction because of so much uncertainty. Look, I don't think anything that happens, whether it's economically or through sanctions or a combination of the two, is going to reverse what Vladimir Putin has already done. He's not going to say, oh, things are getting bad economically for us. Let me pull out of Ukraine. That's not going to happen. I think best case scenario in terms of economic pressure on Russia is that they don't go any further. I really think that's the best we can do. But listen, nothing related to the Ukraine invasion is positive economic news at all.
Yeah, Seth, oil prices, right? So oil over $100 a barrel. I mean, we already are seeing pain at the pumps. And then now with this happening, it's probably going to get worse, right?
It probably is, at least in the short term. Let's remember, though, that the oil that is being bought today is bought on futures. That's delivery dates. Really, right now, we're already into April for those delivery dates. And so if you're thinking about panicking and going out and trying to buy up a bunch of gasoline, don't. It's not going to do you a lot of good. Think about the long term of this. And remember, even the last time we saw a big fluctuation in gas prices, they went back down within a week. I think the next week will tell a lot about what's going on in Ukraine and gas prices. But at the end of the day, I do think as we go into the summer months, gas prices were going to go up anyway. This is just going to exacerbate that.
Yeah, well, to your point, so Dan said the gas prices, they normally go up in the summer, but they're already so high, and now we have this happening. I mean, what do you think they're going to get at?
I think $5 a gallon is very, very realistic going into the spring and the summer months. I don't see why it wouldn't be going that high. Again, what here is going to reverse course in terms of policy coming out of Washington to change the trajectory? Are we going to start opening the pipelines again? Joe Biden has given no indication that he's going to go in that direction right now. So again, supply and demand. How are we going to bring more supply into the market in order to lower prices? It seems like they're not even reacting to that point. And based upon that, prices are absolutely going to go up.
Yeah, Seth, Biden's supposed to speak today. He's alluding that he's going to issue tougher sanctions. If that happens, how do you expect the markets to react? What do you expect, for oil prices moving forward there? Could they get even worse?
I mean, they could get worse. Again, you just never know what the market's going to react to. All the reasons we've already talked about, gas prices going up. I think that if Biden will take a strong position on sanctions, things like what I've already heard talked about, which needs to happen, having Russia removed from the SWIFT banking system, for example, those types of things, I think investors will respond positively towards. They want to see strength out of Washington. And right now they're not, which leaves investors to go, is Putin the strongest man on the globe right now? And now we're concerned. We need to see strength out of Washington, strength out of our leaders. We're starting to see it out of some of the European leaders. It's time for Biden to step up and do the same.
Yeah, so the markets will recover, but the main problem here is gas prices, right? So the national average price is $3.54. The average price of oil is now above $100 a barrel. Dan, are we going to see this go even higher?
Yeah, I think we will. I think that we're looking at oil easily going to 110, 120. I don't see how this isn't lining up to be the perfect storm for inflation in our country. We have two things happening right now. First, we have the geopolitical struggle that's going on with Ukraine. Who knows how far this is going to go? And the second part of this, let's not forget, we have a trucker convoy that's starting up right now that is going to limit, to some extent, how goods are going to get across this country. So with energy prices and with more limitation on goods, demand staying the same, if not going even higher, I think we're headed for a hyperinflationary period.
Yeah, good point. Seth, we keep hearing about cyber attacks. We see that they've happened in Ukraine, but there is obviously concern that could happen here in the United States, potentially U.S. banks. Is there any way, to protect, for people at home who are worried, do you keep the money in? It's protected by the Fed, right?
Yeah, I wouldn't be too concerned about your money in the banking system. Certainly cyber attacks are there, but America's brightest are watching over that, and certainly the government will back it. I wouldn't panic over that. That being said, cyber attacks cost the United States consumers billions every year, so it's something we certainly need to address. Something I do want to go back to, though, is we talk about where the markets are today. One thing I want to put into perspective, the markets were already positioned in a hyperinflated period with high gas prices. This isn't, I don't want to say the nail in the coffin, I don't want to go that dark, but I want to say that this is an exclamation point. It's not the point. This is an issue we've had now for months that we've needed to address. We haven't been addressing it. And it's certainly, when you combine what's going on in Russia, Ukraine, it's causing investors to panic. Don't be one of those people, but also recognize the markets are going to do what they're going to do, and they were going to do it anyway.
Yeah, the perfect storm. Inflation, it's at an all-time high of 7.5%. Do we expect, Dan, that inflation can go even higher?
Yeah, I think that inflation will go even higher. And then the question becomes, what does the Fed do? They're going to have to step in, perhaps with a bold move and multiple bold moves in order to get inflation under control. Look, history always tends to repeat itself. So dare I say, we're potentially going back to the late 70s, where inflation started to really run out of control. Ultimately, the Fed had to really raise interest rates significantly. The impact, the fallout of that, we went into a recession. To me, everything is pointed in that direction right now. So I don't exactly know what events are going to take place that reverses that course.
Yeah, Seth, do you expect that we're going to potentially go into a recession?
I don't know that we're at a recession level. I certainly hope not, because to Dan's point, the Fed's going to have to act. If it raises rates, and it will, it needs to raise it by at least a half a point this next month. And if it doesn't, we're in for even higher inflation. But with high inflation and we get a recession, now we're in stagflation area. So I'm hoping we can continue to see the economy grow. But that is also up to the federal government to get its foot off the neck. We got to end any COVID restrictions. We got to let people get back to work, get the economy booming, because it certainly needs to offset everything else that's going on.
Yeah, Dan, the Fed said that they may raise those interest rates in March. Where like March is a couple of days away. Who knows when? If it was mid-March, do you think that they're going to speed that process up because of everything that's going on?
I don't think so. I think whatever the timeline was originally, they're probably going to stick with it. I want to go back to something Seth said about where our economy is. One of the key things that we need to do is we need to unleash our energy. That is the key. The problem is that's not going to happen overnight. For us to be able to get the energy we need, as well as the rest of the world, we're going to have to rely on OPEC. Now, we can't in the United States just open up the spigots today to become energy independent, which is something we really need to keep inflation in check. However, we need to start that process today.
Yeah, and then there's the gas tax as well. Who knows if Biden's going to get rid of that. All right, Seth Denson, Dan Geltrude, thank you so much for joining us today. Thank you.